Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Contemporary Amperex Technology Co. Limited quarterly report. Contemporary Amperex Technology Co. Limited, CATL, offers a wide range of businesses and services related to electric vehicle and energy storage system batteries. At the core of its operations are power battery systems, which include various types of cells, modules, and battery packs. The company's product offerings also extend to energy storage battery systems, comprising cells, cabinets, containers, and system integration. Additionally, CATL provides battery material products such as lithium salts, precursors, and cathode materials. Furthermore, it processes and purifies metal materials from spent batteries, including nickel, cobalt, manganese, and other metals. Beyond its core business, CATL also offers various solutions for different industries. These include passenger vehicle solutions, commercial application solutions, energy storage solutions, and battery recycling solutions. Passenger vehicle solutions encompass electric private and operating vehicles as well as hybrid options. Commercial application solutions cover a range of sectors such as road transport, urban delivery, heavy-duty transport, and construction machinery. In addition to its business operations, CATL is also involved in investment activities. With its headquarters in Ningde, China, the company has established itself as a leading player in the electric vehicle and energy storage system battery industry. Contemporary Amperex Technology Co. Limited market capitalization of $3,261 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Contemporary Amperex Technology Co. Limited holds a significant advantage in their industry. Contemporary Amperex Technology Co. Limited trades at a higher price-to-earnings ratio of 39 times and a higher price-to-book ratio of 8.37 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 62% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. Additionally, special charges appear non-recurring, suggesting high earnings quality and strong financial resilience. The financial performance of the company has shown significant improvements in both net income and profit margins. Net income has increased by a substantial 52.45% over the period, with a smaller but still notable increase of RMB 2,645,072. This growth can be attributed to several factors, including sustained growth of the principal business and expansion of its scale. The company's profit margins have also seen significant improvements. The operating profit margin has increased from 24.6% to 34.4%, while the net profit margin has risen from 21.5% to 32.1%. However, there are some exceptions, such as the investment income margin, which has surged by a remarkable 100.74%, and the finance costs margin, which has increased due to foreign exchange losses resulting from exchange rate fluctuations. The reasons behind these changes are multifaceted. The company's principal business has continued to grow, leading to increased operating costs. Additionally, the net profits of certain investee companies have contributed positively to the overall performance. Nevertheless, the impact of foreign exchange losses cannot be overlooked, as it has resulted in an increase in finance costs margin. Overall, these factors have collectively contributed to the company's improved financial performance. The company's financial performance indicates a significant improvement in its ability to generate cash from its core operations. A key indicator of this is the positive operating cash flow, which has been consistently reported across various sections of the financial statements. According to the data, the net cash flows from operating activities have reached $33,680,852, demonstrating a clear and substantial increase in the company's ability to generate cash from its core operations. This figure not only confirms the presence of positive operating cash flow, but also highlights the company's growing efficiency in managing its resources. The consistency of this data across multiple pages of the financial statements further reinforces the conclusion that the company is indeed generating positive operating cash flow, providing a strong indication of its financial health and stability. The company's debt level and interest expenses have undergone significant changes in recent times. On the one hand, the company's short-term borrowings have decreased by a substantial $728,298. Conversely, long-term borrowings have seen a remarkable decline of 96.5% or $1.99 billion. However, bonds payable have experienced an increase of 233.3% or $7.81 billion. In terms of interest expenses, the company has witnessed an increase from $693,884 to $782,951. This indicates that despite the fluctuations in debt levels, the company's interest expenses have risen significantly. The company's dividend payment history reveals a consistent trend of distributing profits to its shareholders. As per the provided data, the company has paid dividends in both the previous and current periods. The amount paid out in the current period is significantly lower than that of the previous period, indicating a possible adjustment or reduction in dividend payments. In terms of specific numbers, the company paid $6,104,208 in dividends during the previous period, whereas it paid only $745,654 in the current period. This decrease suggests that the company may be conserving cash or redirecting funds towards other business priorities. That concludes the financial summary for Contemporary Amperex Technology Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.